And we are live. Welcome, ladies and gentlemen, to the first episode of Let's Talk, a six-part series where we'll talk about food, migration, building services, mortgage services. But today, episode one, we're talking all about investing, and we have the CEO of Wholesum, Dr. Tanvir Uddin, joining us today. How are you?
Yeah, thank you so much, Ronald. Very good to be here, and thanks for your time.
Pleasure. Pleasure's all mine. Look, investing has been on the mind of many Australians, may they be Bengali origin or whatever it might be. Money is the crux of our civilization. But we don't know what to do with it. Nobody does. Everyone knows how to make it. Nobody knows where to have to get up to, 6 a.m. in the morning, go to work. But then what do we do with it afterwards? So this is the perfect kind of segment and to talk about yourself, Wholesum, and how you kind of came up with this idea to help people invest.
Yeah, it pretty much started with the exact sort of scenario that you mentioned. A lot of people don't know what to do with their surplus funds. And Wholesome really started because a lot of my friends and professional contacts reached out saying, you've worked in investments or finance, they themselves don't know exactly what I did, but they said you were kind of in that area. Where do we invest? And importantly, where do we invest in a way that's aligned to our values? Particularly a lot of my Muslim contacts and friends were interested to ensure that their investments are aligned with their values. But as a general point, beyond any particular demographic, financial literacy is very low in Australia, and it remains even lower in migrant communities. So these are top of mind issues, and that's really what pushed me in the direction of trying to figure out, okay, what can I actually suggest to people? What can I actually share that I know or what I can see? And it's one thing is about knowing where to invest and how to invest, but the other thing is actually being able to access those assets in a way that's affordable, accessible, and obviously within certain risk parameters. So these have been issues that have really popped up a lot. And it's also, lastly, one of the things that, we don't get taught that by our parents. We don't learn it at school. So it's kind of like you got to figure it out. And sometimes you figure it out by knowing the right path, and sometimes you figure it out by making a lot of mistakes, as I have done as well in my investing career.
Yeah, and making investing mistakes is kind of part of the journey. But if we can kind of limit that early on, we'd have more to retire on. So just before we kind of go on more, what kind of challenges did you face, I should say, when you in the early stages? Like, let's talk about the more entrepreneurial side of Wholesome.
Yeah. I mean, look, there's a reason why the financial sector is so regulated. It's because ultimately it's about protecting people's hard-earned money. And because scams are rife and again, because of the low financial literacy, people can prey on them and their vulnerability. So that was the number one challenge. How do we get a properly regulated, properly licensed investment solution that will have the checks and balances, have the safeguards in place? And I was wary of a lot of the scams that were running in the community, in the Bangladeshi community, in the broader migrant community, and I wanted to steer away from that. So the first challenge was, how do we actually set up a licensed a fund operation? How do we actually know how to do it, but also how do we raise the necessary capital to cover those costs, because they're quite high. I mean, if you were to start a business, financial services would probably be lowest on your list because it is just so regulated and has so many costs that you just cannot cut away. There's no shortcuts. And if you're doing shortcuts, you're probably doing the wrong thing. So that was the number one challenge. How do I get the capital for that? The number two challenge was, how do I get people to trust me? How do I prove that the investment strategy that I want to put forward is something people will actually form a conviction behind and actually back? I didn't have the traditional investment career where I worked at a BlackRock or a JP Morgan, but I knew my asset class really well, which is for Wholesome, we do short-term small and medium business financing. So I knew that, but I didn't have the same pedigree. So it was about trying to get, provide a convincing investment thesis and get people on board. And then the next thing was really, then this is more the entrepreneurial side, is growing a business is going out there, reaching out to people, putting yourself out there publicly, and selling and really building relationships. This was all new skills to me. I mean, I like talking to people, I like meeting people, but then trying to convince them to sell was a skill that I had to learn. So it's something that I'm still learning. But these are three challenges. But these are good challenges to have, because if I could overcome them, as we have been doing as a team over the past year, it means that we can really carve a niche for ourselves and really focus on growing that, because not many people do that. Because it's so hard, very few people enter the space. And so I'm very grateful that we've already made some inroads, and we have really good investors and backers who are supporting us to do this.
Excellent. I want to ask, with Wholesum, I want people to understand what kind of gap in the market it kind of addresses. But to understand that, I think we should also discuss your prior work history where you were overseas and how the idea actually came to fruition. Can we kind of delve into that a little deeper?
Yeah. Look, a lot of the genesis of Wholesum and its fund solution was born out of both the gap that people had where they didn't know where to invest, and with investment asset classes that were not very well serviced in Australia. So if you think about the top three: property investing, stock market investing, and cryptocurrencies, they're all the ones that a lot of people that around me either knew about or had already participated in. But there were limitations to those investments. They are good investments and they have their role to play, but you would not put 100% of all your money in just property or just the stock market, because the property is very illiquid. So that means it's not easy to turn your invested value into cash that you can use for other purposes. So that's what investors call liquidity. Selling a property will take months, and you have to time the market. Stock market and cryptocurrencies have a different drawback, which is they're very volatile. So if you want to invest today, and you might want to pull it out because you want to buy a car in a few months or go on holiday, or maybe you want to put a deposit down, a 6 month, even 1 year time horizon is still very risky, because the stock market could just completely yo-yo around. Bitcoin can go up and down rapidly. So these investments did not fulfill the needs for investors who are looking for, where can I park my money for a short period of time, get a better return than I would leaving in the bank account, and which is relatively stable, so that I'm not going to risk huge value changes such that I am limited to go and buy a car, go on a holiday, or do the things like putting a deposit down. So I saw that was a gap in the market. I knew people were looking for investments, and I had spent most of my career both offshore, when I worked in Indonesia with agriculture financing, then I worked on large debt-funded projects in the Middle East. And then more recently, when I came back to Australia, I was working on short-term debt financing for homes, residential and commercial customers who are trying to put on solar panels. So, Bright essentially put loans of about like $10,000 to $20,000. And I thought, okay, well, there is an asset class, which is short-term financing, which can tick those boxes. And if we can have a very well-diversified investment portfolio, we can help investors meet those requirements. So I drew upon all those experiences that I had, particularly in the debt finance world. And then when I came back to Australia, and people started saying, where can I invest? How do I do it? I started to connect those two dots together. And that really became the genesis for Wholesum's investment strategy.
Mm-hmm. And that's a kind of a unique thing as well, especially behind, and correct me if I'm wrong, you're providing communities that will not get access to funding otherwise, and you're providing them an opportunity to kind of expand their businesses, create that profit, and Wholesum kind of takes a share in that profit. Is that correct in understanding?
Yeah. So the type of businesses that we invest in, so these are classified as small and medium businesses. They can be anywhere from generating a few $100,000 up to tens of millions of dollars of revenue. This segment is also known as the missing middle, because they're not so tiny and so new that you have venture capital investment, or you have philanthropic capital, or even like charity, nonprofit, and then there's also microfinance. And they're not as large as big corporates that can go to a bank, or they can go to large asset managers and get heaps of funding. So this segment globally, both in Australia and in countries outside Australia, they face a major challenge to get capital. And as a result, they can offer a more premium return than, let's say, a secured home loan, or say if BHP Billiton wanted to get a bank loan. So that is attractive to provide a high return. And if we manage a portfolio that has many of these different businesses that are very well diversified across different industries or countries, we can help to manage the downside risks that come about, because obviously they can be a riskier investment. So I saw that as a gap that we could invest into, because I mean, we didn't want to become another property fund or another stock market fund, or even just another credit fund that does things like car loans or whatnot. So we wanted to find something that was additive to the market. And as an entrepreneur, we're always trying to carve out a niche for ourselves that we can really add value, and that obviously has a unique selling point for someone to come in. So we do invest in small medium businesses, and we all follow Sharia compliant and ethical investment structures. So there's no interest related to that. We don't invest into harmful industries like alcohol or weapons, or gambling and casinos. And the underlying debt structures are either they can be profit sharing, like you mentioned. They can also be asset backed, where a business is buying machinery or working capital, and then when we help finance that, and we make a margin or a profit on that, but there's no compounding of interest. So there is some buffer incorporated for things like there could be late payments. A business may have some difficulty to pay in the short term, and so we absorb some of those potential downside risks. So using all these structures not only is a more ethical and a fairer way to do financing, but it also means we can access deals that others are missing. Because if you think about countries like Bangladesh, Indonesia, in the Middle East, Latin America, they're having some booming economies. These economies have large numbers of businesses that are growing, and that growth opportunity is something I thought we could tap into. In Australia, we have a very multicultural, we are a very multicultural society. We should be able to have stronger financial and economic links to the world, but in the investment world, it's still very limited to either investing in Australia, maybe the US, maybe some European countries, and maybe a parts of East Asia like Japan or Hong Kong or China. But we have so many opportunities to invest in South Asia, Southeast Asia, Middle East, and beyond. So I was really conscious about, okay, how do we kind of make that available? And so hence, Wholesum is a global fund. We invest globally, and we focus on small, medium businesses.
Just on the topic of global, right now, the world, people don't know what's happening. You see the news and, Donald Trump this and whether that.
Mm-hmm.
What is the current global market, and how is it affecting Wholesum in terms of its focus? Has there been a huge impact?
Yeah, this is a really good question. And this is also one of the things when we started to develop some of the early strategies to test Wholesum prior to launching the fund. This was something that was top of mind, and I get asked this a lot. And the short answer is, fortunately, so far, and with our investment strategy, the portfolio does not follow or correlate with major market movements. And this is why our investment strategy is something that we say it's non-market correlated, or it's non-cyclical, and it doesn't quite follow what happens in Wall Street or the ASX, or what's happening in Europe, or even when you talk about wars that are happening in parts of the Middle East or other places. And that's because if we're investing in small, medium businesses that don't primarily do business with the large cap companies that are on the stock market, or they don't primarily trade with the United States or China or Europe or Australia, they don't follow those same patterns. And the patterns that affect the, for example, stock market or property is linked to a number of major variables. So, for example, most people were familiar with the interest rates. When interest rates were very low, people borrowed a lot of money, and it inflated the cost of houses. As soon as the interest rates started rising, because again, inflation, the Reserve Bank of Australia wanted to put a dampen on inflation, and they're worried about inflation running out of control. They increased interest rates. That drove down consumer sentiment, business investment went down, and property prices also went down. And any industry that was linked to consumer expenditure, such as retail, hospitality, even travel for some period, that all was affected. But if we're investing into countries and in businesses that aren't directly related to what's happening with these Australian interest rates or the US interest rates, they almost will have a negligible impact. And we tested that thesis through the COVID pandemic shutdowns that affected a lot of the world. So we had portfolios that were affected by the COVID shutdown in Indonesia. But what we saw was, what happened was during the shutdown period, they stopped repaying on those loans. But as soon as the shutdowns lifted and business activity started again, they were able to go back and start repaying. So that was one thing. The other thing was we saw the stock market volatility of 2022-23 when there was a down market, just as the interest rates were rising. A lot of our business portfolio is very robust. It had no noticeable impact because, again, it's not correlated with what's happening in those major markets. And the other thing to realize is a lot of these small medium businesses, they don't have access to a lot of capital. They have a strong incentive to be on top of their repayments and to make sure that they have good credit scores with their financiers. And that's why there's a bigger incentive for them to survive and grow than there would be for a company that might say, okay, I'm going to call bankruptcy and then, call the creditors in and maybe pay cents in the dollar. So that sort of working with a segment that needs capital, having a very good diversification strategy, and investing into markets that aren't directly correlated with the Australian or the US market, that provided a natural diversification strategy. So where people had investments in property or the stock market, they could put their money in Wholesum, and at least Wholesum would be the defensive investment that could help weather the storm, and then they can kind of wait for the rebound in their other asset classes. So we designed this product to provide that counter and that balance to other investment strategies.
So on that as well, so we're talking about the risk profile of Wholesum. It looks like it's not correlated with the global markets. Could you compare it maybe to traditional stocks and bonds and real estate, and just kind of break it down for our viewers from that perspective?
Yeah, absolutely. So if we think about, so there's probably three major dimensions that there are many more, but three major key dimensions to evaluate investments. They are obviously the return, and everyone thinks about the return, but return is only one part of it. There's two other key things. Risk, which is about the volatility in the value and performance of that investment. And thirdly, is the liquidity or time horizon that you need to think about. So the return that I want, how risky is it, and how much time do I have to really invest in that strategy to achieve the expected target? So property and stock market investing is generally considered a medium to long-term investment strategy. Property might even be a very long-term strategy, because if the cycle is more than 5 or 7 years, and you've also got to think about, am I going to time it right? Like, I'm not going to buy the property at a high price and then time it that I'm selling it when the prices come down. So I've got to almost go from either crest to crest or from trough to crest. And you might not be able to time it even in 5, even 10 years. So property is very much a long-term investment. And it can be very risky if there's fluctuations in key macroeconomic indicators like interest rates or job security and employment. Stock market is also considered generally a medium to longer term investment, because the cycles that the stock market follow, if you say invested just in a market index fund, or you invested in stocks that follow the natural market cycle from bear to bull runs and then onto the other side, you're still looking at investing typically north of 5 years. And a lot of the documentation of fund managers that invest in the stock market, they actually need to include so there's a document called the Target Market Determination for Retail Investment Funds. And a lot of them need to include that this is a 5 to 7 or more year investment horizon, so the investors are aware. And the reason being is, in the short term, it's so volatile. You could actually lose money for the first couple of years before you start making money. And then bonds are essentially, generally their value of a bond should be fairly stable unless you're investing into less than an investment grade or junk grade bonds. Their returns are lower, and they usually follow the interest rate cycle. So when the interest rates were low, bond yields were typically 2%, 3%. They started to rise to about 5 or 6% in the current interest rate cycle. So you've got bonds, stable, short term, fairly easy to liquidate, but low return. Stock market, high return, very risky. You'd use it for growth, very long term. Stock investments are typically you're looking at 10% plus. Property investing, again, you'd hope for 10% plus. But the reality for a lot of people who have invested in the property market, it can be even between 5 and 10, just because of when we add on the high servicing cost from interest. So where does Wholesum fit in? Wholesum is sort of what I would call a moderate risk, moderate return profile investment. So our goal is so if we think back, what are we trying to solve? We're trying to solve medium-term investment strategy where people can liquidate their asset fairly quickly within a year, and they want to maintain a fairly stable value, so it doesn't yo-yo around in value, and they want a return that is better than leaving it in the bank. So we target sort of an 8 to 10% yield, and that higher yield reflects the risk, obviously, of the investment. But it's enough to get interested. So it's not like, well, I'll just leave my money in the bank and an interest or offset account. But at the same time, I want to get a bit of a kicker without the same level of risk as a stock market or a crypto investment. So that's kind of the sweet spot that we play in and how we complement other investment strategies.
Yeah. So you mentioned a lot of key terminologies: bonds, stock market. People are probably thinking, "What's going on?" Right? They'd rather leave their money. They'd rather leave their money in the bank account. They'd rather leave it in. But why is that actually not a good thing to do? Why is the investing actually important?
So if you look at if you imagine a chart which is showing the long-term value of that investment asset over time, you have, for example, leaving your money in the bank and earning no interest. So for example, if you're a Muslim and you don't earn interest, the value actually drops over time because you're losing against inflation. So the real value drops. And if you're paying things like zakat and other charity, it's even going down, more negative. Then you have interest-bearing accounts, which kind of track a little bit up north of the inflation rate. So you get a little bit of a real return, but it might be very low. It might be 2 or 3%. And that will grow kind of steadily, very gradually. It's safe. There's very little volatility. It's very secure, but it grows at that. And then you've got like bonds that are a little bit more steep. And then you've got like property, and you have like the S&P 500 or stock market index funds, which basically invest into a basket of many different companies. And then you've got like, if you invested into companies like Apple or Google, it would have just skyrocketed, particularly over the last 10 years. So this is kind of like, you can think about the spectrum of options, right? And if you just left your money in the bank, you're doing yourself a massive disservice because you're not taking advantage of these more profitable investments. And you don't need a lot of money to get started. And B, it's not as risky as people make it out to be, or it's not as risky as the fear factor you might have in your mind. And if you are worried about risk, there are many ways you can manage your risk. One thing you can do is, and this is the most simple type of investment strategy to manage your risk, is have a very well diversified portfolio. So that so it's, as a common phrase says, don't put all your eggs in the same basket, because if that basket falls, all your eggs crack. So similarly, don't put all your money in property. Then you're stuck into an asset class that you might not be able to sell out of. Don't put all your money into stock market, because if the stock market enters a bear market tomorrow, you suddenly are down 20, 30%. Don't put all your money into just the bank account, because similarly, you're losing against other more profitable assets. So a well-diversified investment strategy that has a mixture of defensive assets that are stable, offer a little bit of a return but fairly secure, and growth assets that are more risky but more long-term. And having that mix is the best way you can grow your wealth. And the main thing is, as you start, your investment strategies will change over time because your priorities will change. Maybe you will suddenly enter a phase in your life where you need a lot more cash so that you might want to buy a house, or because you might have a lot of expenses. So you might have children and parents and dependents and other things that you need to spend money on. And then towards the end of your career, in your career, you might not want to necessarily take on more risk and growth, because you're like, well, I've made my money, I just want to now be able to live off it comfortably. So investors need to think about what are their priorities, what are their timelines, and how well diversified they are as a way to manage that. But leaving it in the bank is definitely doing yourself a disservice. At best, you're just kind of beating a bit of inflation, but at worst, you're seriously missing out on. And again, it's important from a risk mitigation perspective, because say you want to take some time off work, say you're unwell and need to recover, or say you have increasing costs. You can't just necessarily go to your boss and say, hey, give me a 50% raise. But if you had other savings set aside and is generating income, that could become your 50% raise. The investment you made 5-10 years ago is now suddenly becoming your second highest income earner after yourself. So that's the position we want to be in, and we should encourage people to diversify their income sources. And getting started is the hardest, but if you start and you incrementally grow and manage your risk, you could end up having a very successful investment portfolio.
Yeah, 100%. Investing is definitely the way to go. Putting money away and hopefully it returns to you tenfold in the future. Okay, so we've talked about investing. We've talked about the different kind of options out there, stocks, real estate, whatever it might be. We've discussed that. Hopefully people are now keen to start investing. So let's come back to Wholesum. Let's come back to your baby. So we've discussed briefly about the investment strategy and how it generates revenue. But if you want to expand on that, please do so. But I think the key factor our viewers want to know is, how is it Sharia compliant and socially responsible? Like, people want to know the money is doing, not only is it the money returning money for them, but it's also doing good for others. Can you kind of go into that in more detail?
Yeah, absolutely. So we invest in small, medium businesses and through short-term financing, as I mentioned. So there are a number of sort of legal and religious sort of requirements that we must be wary of and ensure that we meet. And then there's a whole bunch of other ethical and social responsible considerations that go over and above just the bare minimum legal requirements. So we start with the first bucket. I mentioned earlier that we can't invest in certain industries, so we screen those industries out and we don't have anything to do with them. So then we can only invest in companies that do other activities. And by screening that out, what we actually find, and particularly with small, medium businesses, the common industries that we end up investing in, and our portfolio has a large exposure to, are industries like agriculture, manufacturing, and retail, because this is where a lot of small, medium businesses play. So that's on the first thing. Then the second thing is, we need to avoid investments or any investing, any financing arrangement that utilizes interest or interest-like features. So we cannot just give a loan for $100 and someone's going to pay back $110. That would not be permitted under Islamic law. But also, it could be very oppressive or exploitative for a borrower to be in that position. Regardless of their religious background, if we look at the levels of personal debt, if we look at the debt burden that people might face, small businesses included, it can be very oppressive. To give an example, in my PhD, I studied Islamic microfinance, and we came across in the research around case studies where some microfinance institutions were charging as high as 200 or 300% interest on their loans. And it got so bad in some places, like in India, in a particular state called Andhra Pradesh, where farmers had no means to repay. They ended up actually committing mass suicide because they would rather not, they would rather not burden their family with the debt that they've taken on. And so interest-bearing, especially high interest rates, compounding interest, and mass credit schemes can be very oppressive. So we need to steer away from that. So how do we get around interest? How do we ensure that the financing is compliant and ultimately is a fairer opportunity? So within Islamic law, and now it's adopted by a lot of other institutions as well, including the World Bank and Asian Development Bank, first, what it does is, first thing is that any financing needs to be asset-backed. It can't just be a money-for-money transaction. Like, I can't give you money and you're going to give me more money. It could be that you need something, you need a laptop, you need a car, you need some industrial machinery. I'm the financier. I will pay. I will pay the vendor who's selling those products to you, or I'll appoint you to go and purchase them, and then we will contract prior to that I'm going to sell it to you at a profit. So now we don't have necessarily a loan contract. We actually have a credit sale product. So I'm selling you a product with a margin, so I get some profit out of it, and it's on credit terms because you're going to pay back the exactly stipulated amount, not a dollar more, not a dollar less, and it will be for a particular time frame that we agree to. If you face difficulty to repay, I can't go and say, hey, you're late by 1 month, now pay me interest, interest on your outstanding liability. That would again be breaching the regulations against interest. So financiers typically will, what they'll try and do is maybe negotiate additional time, or they will ask them to pay out of other proceeds that they might have, like they might have a director's guarantee. They might have other inventory that can be sold to pay that debt off. Well, in some cases, they might have a clause where they say, look, if you can't pay us, to try and make sure you do pay, you're going to have to donate some money to charity as your own penalty for being late. But the financier cannot profit from that additional payment because, again, it's not a debt contract per se involving money. It's a sale contract with a very clear stipulated price. You bought that off me for $110. I can't now get $111 from you. That would be a breach of contract. So that's one of the most common ways that you get around it, which is called a credit sale or a murabaha contract. There are, of course, financial leases, which are actually used a lot in the Western world as well. You lease an item, you pay off your lease payments, and at the end, you buy off that item for like $1 as a way of consideration. So you've got the lease contract and you've got the sale contract. So financial leases have an inbuilt margin for the financier already there. And of course, we've also participated in profit sharing contracts where the return that we get is not a pre-committed guaranteed value. It is subject to sharing of risk of the profit that borrower will make when they sell that. So these are sort of the ways that we can get around those legal requirements. And then from the ethical and social responsible perspective, the biggest point to make out there is that by investing into small, medium businesses, we are trying to spur economic growth and development in communities. Because again, they're the segment that don't have a lot of capital, but in every economy, whether it's Australia or Bangladesh or Nigeria, small and medium businesses employ the most people in terms of creating jobs. They contribute the most to the gross domestic product or economic activity. And they are the ones who are constantly innovating and finding new ways to do business because they're up against the major incumbents. So by investing into that segment, we want to try and have a direct and indirect socially responsible outcome for communities in terms of job creation or empowerment of minorities, for example. And by making sure that we're not being oppressive in debt collection, that we are working with those obligors to help them with their repayment, we can try and be ethical in our treatment as well. So this is kind of like the two aspects to our approach, and why by investing in this asset class, we can really try and spearhead a different direction for our investments. Like, I'll give you a really funny example that I came across yesterday. Someone was talking about investing in luxury handbags. And there are some people who invest into things like that. It's like fine art where some products are very rare, and so the demand for them go up after the limited release or sale, or even things like Air Jordans and things like that. The thing that I kind of look at and I encourage more people to think about is I can make money off that, and it can be Sharia compliant, it can be completely legal, and no harm is done. Although with the clothing industry, there are questionable supply chain practices. I mean, and people who are from Bangladesh may appreciate about how garment workers get treated, and then the environmental cost and then water usage and waste. But putting that aside for a moment, you can make money. It's great. It's fine. But what is my money really doing? It's exchanging hands. I'm buying off someone who sold it for 1,000, and I'm hoping and relying on the fact that someone's going to sell it, buy it from me for maybe $2,000. So I make $1,000 profit. My money hasn't really been catalytic. It hasn't changed the economic paradigm. So for me, and one of the reasons that motivates me for Wholesum is The capital we're allocating to businesses, they're using that to grow. They're using that to invest in their staff, their team, their processes, in machinery, and that grows the economic pie. And so I'd rather be involved in investments that have that mission focus, and that actually makes a change in the world. So our money is not just giving us a profit, but it's actually making an impact. And I think that's what's exciting, and that's what a lot of investors are really motivated by. And that's why Wholesum hopefully is providing a bit of breath of fresh air to what is already out there.
So from everything we've talked about so far, we've talked about the investment, why to invest, why it's important, what are the options. One thing people don't consider are the fees. So what are the fees associated with Wholesum compared to other investment platforms?
Yeah, absolutely. So as a managed investment fund, we follow a very traditional fee structure that many other funds do, which is a management fee and a performance fee. So our management fee is fairly competitive for the type of asset class we're investing in, which is private markets and in credit contracts. So our fees start at 1.33% per year, which is paid monthly. So you got to divide it by 12, and that is the percentage of the invested value. So if someone's invested $100,000 and their fee starts at 1.33%, that means that we get $1,333 per year from them, and they actually pay about $110 roughly per month. So that's the management fee. And then the performance fee is that if we meet our investment target, and remember, our target is to help people get a better return than inflation or the bank interest rate. So our minimum goal is either the higher of 8% per year, or it has to be at least 3% above inflation. So inflation's come down. So in effect, our target is 8%. So if we achieve 10%, the outperformance is 10 minus 8, which is 2%. And we charge a percentage of that, which is called the performance fee. And our performance fee starts at about 13.33%, which is for the lowest price, which is usually for our non-profit clients. And we have tiered pricing. So 1.49% management and 14.9% performance if they're investing above 100,000. And if someone invests above 25,000, then it's 1.79 and 17.9% for management and performance fee. And so the thing to put in context about the fees is the underlying question one needs to look at is, what is my net return? Is this fund giving me a net return after fees that is helping me fulfill my target and my objectives? If the answer is yes, then it's adding value. If it's not, then it's obviously the fees is something that we're concerned about. So our fees are reflective of that. So, and the other thing is we're not investing in the stock market where there's a lot of public data and lots of stock funds. So some people try and compare us to that and say, well, why are their fees lower? It's completely apples and oranges. We deal with very niche products in very niche markets, and it has a different sort of approach. And so that's why our pricing reflects that. And then the last thing to kind of look at is our fund is very short term. So if a person is not happy with the investment strategy or the fees are not doing as well as that one looks at, they can obviously withdraw their money after 6 months. So we try and offer that flexibility as a way for people to not be locked in and committed in a way that's harming them.
So a great follow-up to this question, everyone's thinking about it right now at home. Everyone's thinking about it. How quickly can they start seeing their returns, and what's the timeline to profits?
Yeah, sure. So we operate as a monthly investment fund. So the cycle is monthly for people to come into the fund, to leave the fund, and to get their profits. So when you invest with Wholesum, so let's say someone invests this month, then our investment we will make the investment of their funds next month, because the cutoff date is the last day of the month. We process the applications for people who've come in, and we start investing from day one of the following month. And then the first profits will be paid for that month the following month. So let's say if someone invested in October, we invest in November, they'll get their first profit in December. And that December profit that's paid is reflective of their November returns. So yeah, it's very quick, and it means that we can really truly be a passive income generator for our clients. And that's one of the reasons they love us, because we do provide that regular return. They don't need to wait a whole year before they get their money. And they can start benefiting from it. And also it means that they can compound. So investors can choose to cash out on their profit, But the magic of investing comes when you can compound, which means that if I've invested 100,000 and my profit is $1,000 for a month, my next month's profit is not on the 100,000. It's on the 100,000. It's on the 101,000 because I'm reinvesting the original principal plus the profit. And now my next month's profit, if it's of the same percentage, is going to be a little bit higher. And each month I'm adding and adding to it, and that gives an additional kick. And this is one of the, I guess, it's not a magic trick or anything, but it's a hack about investing, which is that if you can allow your investments to compound, that's when you really create the massive, that 10x thing that you talked about over a course of time, that comes because you're investing your original principal plus the profits you make. And that's an important strategy to try and grow wealth.
I'm sold. If there people at home that they're sold, but they want to know what's the minimum investment. How do we get started with Wholesum?
Yeah, so one of the questions you asked earlier is about what are the challenges and how to get into setting up a fund. So it is definitely very regulated and very challenging to start. So we've started off with being a wholesale fund. So we take investments from investors who have been accredited by their accountant as meeting a minimum income or asset requirement. So we are for those type of investors initially. So that's the first requirement. They need to be certified by their accountant. And then in terms of minimum amounts to invest, we start investments from 25,000 Australian dollars. And they only need, and any investor needs to only be with us for 6 months. So if people have got a little bit of cash lying around that they are currently not using, or it's earning them very little return in their offset or bank account, and they might want to pull it out in 6 months, we're perfect for that. And we can still offer a fairly attractive return. So 25,000 and 6 months are the two minimums. And if people really in the worst case scenario want to pull out, they can pull out earlier. There's a little exit fee that they must pay just so it can process their redemptions really quickly.
Awesome. And so new investors, how do they follow up with you to start a credit account and begin investing? Like what can people do right now to get started?
Yeah, absolutely. I think the first thing they should do is just reach out to us. I mean, the contact details you put at the bottom of the screen. They can call us, they can email us, and if you reach out to us, we'll then organize a time to chat, understand your circumstances, work out what your needs are, and then direct you into the right channels for you to get started. We have an online portal that people can invest through, so it's all managed digitally. So whilst my team in Wholesum, we look after the investments and the marketing and the relationship with clients, we have a whole back-end team that looks after the compliance and onboarding. So we work so because it's a regulated industry, a lot of people don't realize is that the fund manager actually doesn't get the money. So when people invest into our fund, the money doesn't come to us. It goes to a regulated body called the trustee. The trustee looks after people's money. They check every dollar that comes in and every dollar that goes out. And so those investors who come in, they'll get checked by the trustee, and then they'll be issued with their legal certificate for their investment. And they're the ones that will do the accounting, make sure the numbers are correct, and pay out the profits. So really to summarize, contact us, email the email below, and we'll have a chat and we'll work out how to best support you, and we'll get you onboarded as quickly as possible.
Dr. Tanvir Uddin, thank you so much for your time. You have created an absolute fantastic financial instrument, Sharia compliant, 8 to 10% returns. My bank's going to give me 5%, and it's haram. Like, you've created something amazing. So thank you so much for your time.
Absolutely, it's a pleasure to be on the show with you, and I'm hoping that we can add some value and make a difference in people's lives. And we welcome feedback and ideas from anyone, and anyone who wants to work with us or partner with us, more than happy to have a chat. Thanks again.
Cheers. So ladies and gentlemen, that'll be the end of episode 1. We'll stay tuned for episode 2, where we go into mortgage and how it works and the brokerage system. So please stay tuned. Otherwise, see you later. Assalamualaikum.